Good day, everybody. Still here, Daily Market Pulse, Wednesday, September 10th. So stocks bounce back. They close higher. Volume was low, however. So they're still kind of in a consolidated, sort of a profit-taking overall, but now transitioning perhaps. We'll see if that's the case. But support was there, established, and we'll see if they can actually confirm that support tomorrow. Distribution day count is still quite low. NASDAQ came back over the 8-moving average. All others are still below. Dow Jones, you can see right at the 8, still below the resistance, so still trying to push. The 20 over the 50 is a good sign. That's why support would be strong at 17,000, which is what happened. We discussed it over and over again. Stochastics reset. Will it go all the way down to oversold? Don't know. It might. If it's bullish enough and strong enough, it does not. You'll see in the past there's times when it just simply does not. You'll see the same thing here. It just does sometimes never goes low all the way back to, it just keeps going higher. This is where it did on a correction, of course. So here we are, and this could actually bounce, come back up here on the S&P. The Dow Jones did the same thing. So there's your support right at the polarity, 1990, and bouncing with a bullish piercing. Below the 8-moving average, still plenty of room still to the upside on the S&P. So look, everything still looks on the bullish side with still kind of in a consolidation mode for the time being anyway. We'll see what they lead to. Holding 45.50 on the NASDAQ. Room above, obviously, into the Bollinger Band above at 46.50 and maybe higher. Consolidating, obviously neutral for the last week and a half to almost 2 weeks. Support below will be the 20, which is immediately below. The window at 4,500 always remains the next level of support that would be established or at least anticipated if it sinks lower. Next, let's take a look at the TSX. The TSX has acted a little bit differently than what we see in North America, the United States, and so it's still flagging. It's hitting the 20 now, right at or near the pivot area at 15,600 or so. So still looking for the positive of a push. It's actually oversold here, so we're looking for something higher. Room to 15,400, of course. That's the bottom part of the trend and channel and the 50-day moving average, but we'll see if that's where they take it. The DAX, we mentioned a pause at 9,800 because of the way the moving averages were. 8's crossed over and higher, yes, but the 200 is flat. The 50 is crossing below. The 20 is still well below, but now rising. So we may see some stability at 9,600, and then we'll see what happens after that. We're expecting a bounce if that's the case in price. We saw the U.S. Canadian dollar come back to resistance. All the clustered moving averages going sideways, just immediately below at 109. 50 is still below and rising, but now we're looking for it to hold here at 109 and some change and bounce back and attempt perhaps a move on momentum above 110. So not so good necessarily for the Canadians. Let's see. Euro is stabilizing down here after a big flush to the downside. There's still room to 127. But on the upside, you're looking at trying to surpass 130 and ideally get to 131 on any kind of momentum to the upside. Treasuries have dropped into 137. That was the targeted area. There it is now at the 50-day moving average as well, including a large polarity across that level at 137. It's oversold, so the possibility of a bounce here is likely. Anything kind of a flush through will take you down to about 135 below as the next support level, or at least target anyway. Japanese yen may still be going lower. It looked like it was stabilizing at one point or another at 95. Not the case. 3 consecutive days in red, and even again today, not looking good. Room now in this case, well, lower. Obviously, it could be a measured move. It's 10 above. Let's see. It could be as much as a full 5 points. Could be a little less, maybe in 4 points. So it could be dropping now at this point into 91. Yeah, probably 91 or more. 90 to 91 essentially would be the target potentially on the downside. A bounce back up toward 95 would be warranted, at least temporarily, to at least test that former support, which is now resistance, especially since we're seeing the moving averages really start to separate themselves. When they start to do that, you know things at some point are about to wind down. Same thing here. Moving averages are starting to really get separated from each other. A decline through 1250 at this point on gold. Looking for 1240 still as a target below, and then will reevaluate once again if they can establish any kind of bullish activity. Same thing with silver. It's hanging on to 19 for its dear life. Let's see if they can hang on to that and push back toward 1950 or higher. And we move over to crude. This is, I believe, the October contract was playing around at 93 and then flushed through that today, making a new low into 92 and lower, 91.50. Room to 91 and 90 at this point, and that seems very likely in an oversold state. And then bounce back toward 93 on a move higher, on a bounce, and some kind of a dead cat bounce. Bullish piercing here on the IWM, the small caps, holding the 20, holding the 50, holding the polarity, and the 200-day moving average looking for a bounce back toward 117.50, and then eventually as high as maybe 120 to 121. With the markets going higher, the VIX, of course, then faded. No fear. Went into 14 as a high today, and then faded into 1350, 1250-ish, and room still to 12 where the original window was as well.